Hey, what's going on, ADPI Nation? Kevin Brenner here, host of the Active Duty Passive Income Podcast. You know who I am. You listen to this podcast, and today we have another incredible guest who's going to be talking to us about multifamily real estate investing. We have a lot of guests who come on the show and talk about multifamily real estate investing. This one I just happen to particularly like more than most. Jason Yarusi is here, and he and his wife make up this power couple dream team, and I love the way they work together. And I love something that I really want to talk about and hit on today is a struggle that a lot of you might be facing at home right now. You listen to this podcast and you're thinking about, man, I wish I could get my spouse on board. I wish my spouse or partner was as passionate about this stuff as I am, or whatever. And Jason and Pili were able to do this and work together and build a little mini empire, and they're continuing to build, and it's really impressive. And it's we're going to talk about that. We're going to talk about the state of the multifamily market. Every time I record one of these episodes, we talk about this commercial real estate. The economy is constantly changing. We're recording this in March of 2023, and it's things are changing, right? Things are changing fast, and we're trying to figure out as investors what the next move is. And it's always great to look at the commercial real estate folks and see what they're doing, because a lot of that ultimately does end up trickling down to single family, if that's what you're into. So Jason Yarusi, welcome to the podcast, my friend.
Awesome. Excited to be here.
So let's jump right into it. I think we first met, was it on Clubhouse maybe? I don't even know, man.
I think that was our first connection. Of course, Clubhouse, not a video platform, so it took a minute on that, but that from a connection of talking back and forth in a room of other people talking back and forth, I believe that was the one.
I haven't been on that app in years, honestly.
There's people still using it, and I actually had not been on it in some time, and somehow you get these alerts. I was like, oh, let me see what this room's about, and on it for a minute. But it served a purpose when it served a purpose. Of course, we got introduced to each other, right? So it served a good purpose. But on that front, we've been busy with some other things.
Yeah. I mean, I kind of got burnt out after just coaching people, answering the same questions over and over and over again. And I was like, God, this is cool. I like the platform, but it didn't really work for me as a creator, as a coach. But I'm sure a lot of people are using it still. And ADPI, we never moved in that direction. We thought about it for a while, but didn't really move in that direction. But let's talk, Jason, about how let's hit on that first topic, and I really want to kind of dig into how you guys created such a strong bond around real estate, and your story, you and Pili, and how you're able to make that happen when it's so challenging for so many other people.
And I'll give you two parts. The easy part is Pili and I met working together in a different space, right? But we were bartenders in New York City, right? And that's where we met. And so we had this thing where we met working. And for many years, I mean, it took me almost a decade to get Pili to look my way, right? So over that time, she was back in Hawaii, back in California, other places, back to New York City. But between that part, we worked together for a long time, knowing that. So it was learning to be a couple. That was the new piece of the puzzle. However, where I usually see the bridge gap, right, where I usually see the difference in people in terms of them trying to get their spouse on board, is that we all think, when we're doing something, we're empowered thinking that we're doing the right thing, right? We're out here, we're saving the world, we're helping others, we're creating wealth, we're doing all these pieces of the puzzle. But sometimes we forget to include that partner as part of the conversation, right? Because sometimes we forget to actually ask them, what do they want, right? Because I'm working 23 hours a day. I'm out here, we're growing our portfolio. We're doing this part. And they may be like, we have two little kids at home. We just want you to be home for dinner, right? And that's usually the first piece, is that, have you actually asked your husband or your wife, your boyfriend, girlfriend, what do they want, right? What do they see in this space? Because it might just be a simple connection point where we've jumped to, they should be seeing how much value I'm creating, which you probably are. However, it might not be the full intent of the value that they want, which might be you being present, or you having some other role that could then empower them to be like, okay, great. Thank you for doing that. I'm so happy they're able to do this real estate business because you get to do this other role.
Yeah. And I think too, being a military audience, a lot of the times, especially when I was serving, I mean, I had a top secret clearance. I couldn't talk about the things that I worked about with my spouse. It's just not how it works. And a lot of folks out there with clearances in the military, you just, they say, how was work? Oh, work was fine. And that's pretty much that's pretty much where the conversation ends. So it's like, yeah, what'd you do at work today? Stuff, things and stuff. And that's where the conversation ends. And then, you kind of form these different roles, like, okay, talk about their work or you talk about your partner's work or what they're doing. And you kind of have roles around the house and all of that. And usually someone in a partnership, whatever, gets tasked with like, hey, you're going to be like kind of the finance person. And a lot of the times the other half, the other partner doesn't want anything to do with that. So how is it, Jason, that you two were able to kind of work together? Because real estate is so finance heavy.
Yes.
For folks out there who may have, a husband or wife who is just like, these numbers are not for me. Like what can they do to have these deeper conversations?
Yeah, and that's great. And I can understand that part where you're not allowed to based on some part here. So the dichotomy of having a transition to talking about something can be difficult. However, many times opening up this conversation allows both to be involved. And in terms of numbers, I mean, that's just a valid question, right? And most times here, people can, they don't want to, right? So we'll set up that point, right? If they had to, they would, if they're forced and get put in that position. However, if they don't want to, that's fine too. But they also need to understand which pieces of the information do they need to know so they can both be viable within the conversation. However, for Pili, she can underwrite, but she's not doing it, right? She doesn't do that. She doesn't do anything from a financial perspective, anything from running asset management, other points. What she does is speak to investors, have open conversations, investor educations, right? Because she loves that side of it, right? She loves the connection, loves the community. She lets me sit here in the dark closet and do the back end analysis here. But she will come to me because to have that empowered conversation with investors, she has to understand really the breakdown of the project, right? She needs to understand that side. So those are the pieces of the recipe she's going to go after here. So as we have this conversation is that you need to have as a couple what needs to be done, right? So there's going to be 5 or 6 or 7, 10 things that need to be done, and who wants to do them first. And then of the pieces that may not be of their favorite, they're going to have to be done. So your goal is you're either going to fulfill that. Maybe it's going to be that you just, one of you picks and allocates and has to do it, and the other partner does the other pieces, or you're going to hire someone, right? You're going to hire another person from your team, a VA, or you're going to fill that gap in some way. Ideally, though, you do have to have that connection point where you come back to discuss this. Now, hardest thing is that as being and having your own business is that when does it stop, right? When you get home, like it just never stops. So the other piece is just to understand your partner when that these conversations need to have. Like I know that before 9 a.m., I'm not bringing up anything to Pili. There's nothing that important that happens in that morning because I wake up, I go running, I'll come back, I'm idea heavy, I'm ready to go, right? And then on this part, it's 5 in the morning, 6 in the morning. I don't want to put all this stuff on top of her when her goal is kids, ready, prepared, school, right? It's not fair to her. So no matter if I have this world-changing idea, it's by 9 a.m., it's still the same idea. Right. And by that time, I've thought through it, whether or not it's empowered, I even need to bring it up to her, right? Yeah. And so understanding where your format is that there is no turnoff, right? We all want the breakaway from the 9 to 5, but the 9 to 5 allows you to go and have a turnoff. In this business, it's great, but you also have to have selectivity of which times that you're utilizing yourself and your conversations with you and your partner.
Yeah. And I this reminds me, your point there reminds me of, I believe it's a Gary Keller quote. And he said that there's never, ever, ever a real estate emergency. If you think about like true emergencies, it can wait. And that's what's so attractive about this business, because from folks listening to this podcast who might be first responders, military, sometimes there are emergencies. Like I've been in situations where it's like, I could die right now. So, I should go and find some cover or go and do that. It's not like, like, let me wait this out and underwrite this deal. When the deal is like, indirect fire and all that stuff. But
patience is huge on that point right there, because I've been trying to implement more into my team, not to be reactive, right? Because in the second part, there are people that at every point are going to call you up, right? Oh, this measured wrong. Oh, this came, like all these things. But if you give it an hour, 2 hours, it's 90% of them are figured out.
Hmm.
And
Yeah.
you don't even have to get back to them, just 90%, right? Another 10%, okay, we'll go have that conversation. But we've also had time to collect ourselves to give the proper response.
Yeah, and that's super helpful in any type of organization, being able to train and manage folks. When so yeah, it's really cool to hear how you guys kind of identified the roles and responsibilities. And first you figured out, okay, this is what we want to do, and have that conversation and make sure, like, hey, this is, so if you're listening to this podcast and you're trying to get your spouse on board, first thing, have an honest and open conversation and say, like, hey, I'm super interested in this. This is something that I really want to do, and I need your support to do it. And from there, it's a test of your relationship, right? Like, obviously, it's going to go well, and say, okay, yes, I support you. Okay, well, that support looks like X, Y, and Z. We need to accomplish, in order for this to happen, here are the steps. And these roles need to be fulfilled. I would love to work together with you on this project as it's tied to our livelihood. Does anything in this realm interest you at all? And having that conversation and figuring out, okay, these are roles and responsibilities that we can fall into and maybe build a partnership over. And then if the partner says, absolutely not, I just want to focus on raising the kids, or you're doing X, Y, or Z, or focusing on my own job or whatever, then that's cool. Then you know that you can go and bring on other team members and it's going to be fine. But if you don't have that conversation and you expect your spouse or partner to just be supportive and be on board, if they don't understand what the heck you're doing, I mean, put the shoe on the other foot. How would you
Yeah.
like, like how would you feel? So I think that's some really helpful advice, and I appreciate that, Jason.
Yeah, problem, solution, and how we fit in. Most of the time, we go with how we can fit in, and like, what's that going to do, without saying, okay, the reason we want to do this, and here's the solution for it. So for us, Pili's pregnant with our first kid. We're out there doing all these construction projects. We had moved from that, hundreds a year with my father's company, and whole son, we're flipping, wholesaling guys. We're doing all these active things that we have to be actively involved. So we want to find a way to control our day, and we're going everywhere but to that. Right. All we're doing is leading away from that goal. And we just kept saying, like, man, like, we want to do this, but it's not the right path. Came upon investing out of state in some small rentals. And that was that open door where I was like, oh, interesting. And then I was like, this is cool. You see what's happening here. We're getting a little back at our time. It's not scalable. But I saw this. There's other thing. It's called large apartment investing. And we had explained enough, like, oh, if we do this on a big scale, we can get back more control of our day. And that allowed the conversation to go forward, because I went to Pili and I was like, listen, we're going to go out there and buy apartment buildings. She's like, no, because she's risk adverse, right? And it's that scary thing. She has no idea what it is, right? And I just brought her that idea, right? And she'd be like, no, that's crazy. Like, I don't understand. So, and the confused mind, or the mind that doesn't understand, is going to say no, just like you talking to your investors. So we approach it like that. And like, okay, doing that solves the problem of where we're getting a little bit back of our time, but we're never going to get to this part of getting control of our day. We can do this with this because it allows us to, I talk to the restaurant approach, and many here could potentially speak to the military approach, is that we've been in 100 and 200 seat restaurants. We've been in 12 seat restaurants. What we learned from the 12 seat restaurant is dinner is still 2 hours long. And you can only turn 12 seats, and there's only so many times you can turn them. We have 100 or 200 people in the restaurant here. You have the ability to scale because you can turn that so many more times.
Right. Yeah, and then there's literally more seats at the dinner table.
Correct.
Which means everyone gets fed, right?
Correct.
So, man, this is so interesting, because I was recently just had a podcast with Matt Aitchison. He's a hotelier, does boutique hotels, and he was talking about the levels of financial freedom, and well, the levels of financial independence, really. And the first one is financial freedom, right? It's like, hey, I made enough money, I'm getting my enough monthly money to cook, keep a roof over my head, put food on the table, all that, like, kind of level one. That's what Brandon Turner calls it, right? Level one financial freedom. And once you reach that, then it becomes a balance over, okay, I want to keep making horizontal income and keep making money, but then it's about your time. And what you're talking about, Jason, is what you guys realized. You were making the money, you were hustling, and you were doing the wholesaling and the flipping and doing all this stuff, but it's so active. It is so incredibly active. And then it never stops. You're constantly
Correct.
having a conversation. You're constantly in this whirlwind of stuff. And without that, the boundaries of life and work just fade. And without those boundaries, especially from a position, where I'm at and where you're at, where we work from home most of the time, unless we're traveling to projects and stuff, but we're working from home and we got to turn those boundaries on. Otherwise, that family time that we're the reason we're working so much, it's gonna just evade us, right?
Yeah.
So
It's so interesting because it just talks to even like building your team and like where you can come in to support it, right? Because doing that, I found that I was just never going to be able to pull myself out, right? Because maybe someone out there is building a great scalable business and flipping, but we just couldn't put ourselves out, right? And so yesterday, Wednesdays, I get a more time, right? So I like to read a lot of financial art. I like to do a lot of reading. Well, in that fact, we now have the infrastructure here, but we had two different things go under contract yesterday without me being the point, right? I was like, wow, I got into the day. I was like, that was a pretty good day, right? I was able to gain a lot of exposure about what I wanted to connect with, read with in a number of different platforms. And it didn't stop because I wasn't doing something. And for many years, even when we got into multifamily, it was us as the roadblock, right? So our first syndication, we're the operators, we're every piece, right? Asset manager, due diligence, underwriting, capital raising, speaking to the bank, working with property managers, working with all the other partners and raising and bringing investors in, right? Now doing investor communication, we were everything. And you can only expand so far because if I'm doing, say Pili's talking to investors and I'm doing underwriting, well, who's doing all the other pieces? Right. And that part, you have to continue to build yourself in a way, if you want to, right? If you want to scale, that you can have the team around you so we can all be in the right position to keep empowering these projects forward.
Yeah. And that's the really great thing. I think it's, for a lot of folks listening to this podcast, it's easy to, easy. It's easier to start with kind of single family real estate, 1 to 4 unit, and you could probably handle most things by yourself. You get a property manager, you get some external team members, it's fine. But when you start crossing into these larger projects, while the general process is the same, it's just the same and more. So it's just kind of multiply the required work that, if you can underwrite a single family property in like an hour, I mean, it might take you like 4 hours to do a large 200 unit apartment complex. There's just more things to look at. That's all. I mean, the general principles are still the same. It's just more things to look at. So, from that perspective, you guys transitioning from kind of the single family, the active stuff to the multifamily, was that transition driven solely based on setting up those boundaries and that family time as your family grew?
That was a big piece of the puzzle, right? It also looked at scalability. Like we were doing fine with the flipping side of it. We were doing okay, like we're good enough, but it was just, I just didn't see the path forward. When you're in something, you're like, okay, it's good, but it's not great, right? In many factions, it just wasn't hitting that threshold, right? And so I was looking at this and I was like, that just gives us the ability to maximize on what we've been good on scaling things before when we haven't been the piece of the puzzle that's been holding it back. Right. So and that's mostly coming from, anything entertainment or restaurant world. But in that front, we were able to empower other people forward. Right. And that was it. It would be us and others instead of us. And we were so inclined to be just us here when it was the flipping, the wholesale, and the construction. Right. And that became a point that I was like, that's the roadblock. Like, we got to figure a way out. And sometimes the hardest thing, I heard someone say it, this guy, Anthony Trucks, he was like, it's hard to see the label when you're inside the jar. And when you say most of the time when you're so inside, right, it's hard for you to see the actual problem when it's right in front of you. And so if you could step back, we feel that in most times, if we're not balancing everything, then the whole world's going to crash. But most of the time, if you stand back, even for a day or for a week, and you'll figure out the 3 of 73 things you're juggling that you need to juggle, right? Mm-hmm. I got to feed my kids, pick them up and take them to school, right? That's probably a primary thing, right? That's got to happen, right? But that call that you'd like to have to learn about something, if you don't have that today, you could probably do 3 other important things that are much more important. And that call can happen in a week, right? So everything is not urgent, right? We have to look at, okay, what's the important pieces to empower me forward? Thinking longer term is that. And that's the hardest thing to do. Like, we look at social media today and everything's reactive in front of us, that we see all these things that are massive successes as if it had happened this moment. Like 10 seconds ago, they were nothing. And I guess there's success on Instagram, when in fact they've been doing the work, doing the reps for years, right? We don't see that side of it. And so we think we have to have that same piece, right? If I do this today, if I didn't get some massive result right away, it must be a failure. And the big thing with multifamily is that you could potentially get into a project quick, but you have to build the parameters first, understand the process, and be able to put forward the process and be disciplined to the process. Most of the time, we lose our discipline, right? Even in underwriting the bigger deals, my brother joined us about 3 months ago, and he was like, "Hey, so when I underwrite this property here, he's got a financial modeling background. He's like, should I go all the way through and I figure I go speak to the tax department, go speak and get insurance quotes?" I was like, yes. I was like, what's the point? And like right now, if you do that, you're going to understand how to do it for that county or that city or whatever. Also, insurance, you'll get the parameters where you are. If you speak to lenders, you'll get that. Or you do this underwriting and the deal looks good, and then all of a sudden we have a deal that looks good because you guessed on a bunch of stuff. I'd rather do it one time and get the parameters. And it may take longer, but at least you have the setup that each time you have a basis to build off instead of just guessing. And most of the time I see a bunch of people who just guess on certain parts and then, oh, this deal looks good. Well, are any of these, where did this number come from? Oh, I put it in there as a placeholder. Well, ideally, if we have a bunch of placeholders, then ideally we just have a guess on if this is a good enough project. And now you actually have to still do the work. And by the time you go in and do the work, you can get yourself quicker to a result. And so you're staying disciplined on many things, even if it's investing in a market, right? Most of the time we get in the market and within a week we hear something or see something or somebody else says something about another market, then we're in another market. And we find exposure.
Good idea fairy pops up,
everywhere. So we're in all these different markets trying to learn a process. But if I'm trying to learn how to basically analyze, identify, and buy multifamily properties, I'm trying to do that in 10 different spots at the same time. It should tell you that you're basically doing the steps in 10 different places. If you just do it in one place, if it turns out to be wrong, okay, no problem. You go do it the next place. You're going to be twice, 5 times quicker in that place because you just did it the whole process. But when you're trying to learn it in 10 different spots, you're going through the same struggles in each market, and it's taking you longer to get to your desired result.
Yeah. That's man, that's so powerful. I love that. Just being able to acquire that focus, because we all think we need to be everywhere at once. But the fact is that say it all the time on this podcast, the rich is where the niche is. And if you can niche down into your market and select the asset that you're looking at, and you know what, maybe the first 10, 15, 20 are going to be turds. They might be, but 21 could be right around the corner. Yeah. And you have to stay persistent, and there's no substitute for persistence. There just absolutely is not. It's just completely up to you.
I will give an example if we have a moment for that. So the market, right? When I started, I got so dialed in that I just did Louisville, Kentucky. And when I was in Louisville, Kentucky, I was 75 to 150 units, BC assets built between 1975 and 2000. At that time, it was 2 to 7 million on purchase price, and only in the South and Southeast submarkets. And so you're like, whoa, this is identified and eliminated a bunch. Super dialed in, but I did 400 units before I went anywhere else, just in that, because I was so quick to react. I already knew how they operated, right? And so I was like able to just analyze it, be ready, and go take deals down because I knew exactly what I wanted. Maybe I could have done more in others, I don't know, but in that front, it worked in such a great fashion because I was so honed in. I was able to get great opportunities because I was so ready, because I knew exactly when something came in front, I'd either be a quick no or, yep, let's dive in, let's see what we got. Okay, this is a good deal, let's go.
Yeah, and that's the kind of detailed level of criteria you need when you're talking to brokers, because if you're not at that detailed, they're going to say, "Oh, this guy has no idea what the heck he's talking about." Correct. I'll get to him when I get to him. Let's transition this conversation, Jason, into where we are with the market right now. So it's March 23rd, 2023. We're recording this podcast, and we're on the heels of the SVB and Signature bank failures. The Fed yesterday increased the rate another quarter point, which I think a lot of the market anticipated. I think if SVB and Signature didn't fail, it would probably have been a half point, maybe even 3/4 point. But interest rates, bottom line, interest rates are continuing to rise, and in the multifamily space, we've been in this industry, and if you've listened to the podcast I recently did with Rod Cleef, you know that we've been in this inflationary, extremely compressed cap rate market where deals just aren't penciling out. I mean, they're just crazy. And for the past 5-6 years, operators have been, sometimes even new operators, have been getting into deals and forcing themselves to make these assumptions that just aren't correct, whether that's assumptions on, I mean, no one really could have predicted what was happening with interest rates, right? But
yes.
uh, even just assumptions on rent growth. If you're modeling 3% year over year rent growth into your stuff, sometimes that ain't happening. But the biggest thing is what's happening with bridge debt right now, and there is a lot of operators who purchased in the last 3 years who are in a lot of trouble right now, and they're looking for a way out. Jason, do you see this as an opportunity for new multifamily operators or just existing multifamily operators to pounce on some deals that we might be seeing some reflation in the market or prices coming down on these assets?
Yeah, prices will moderate. I don't know if we're ever going to see this like 30, 40, 50% haircut that goes out in this market. That's just a lot based on just the need for housing. Because the other side of this is that, we need 16 million houses between 2020 and 2030. We're going to get to like 11, right? So we're going to see this crunch, and that's going to be good markets, right? We can't talk to this. It's a broad spectrum. But the fact is there's opportunities in every market. You just have to understand what you want to find and how you can get there. Most of the time, we find that, oh, I can't invest now because interest rates are too high. But if you think back 1 year ago, you were saying, I can't invest now because, the price is too high, right? So when can you invest? Right? When is that time? Because you have to say, if you're waiting for the market to bottom off, we're never going to know when that is. By the time that happens, the market's going to be going back up, and you're going to say, I'm going to wait for the market to hit the top and go back down, and then you'll just be on this cycle. So understanding what you want, what kind of returns you want, what kind of investor returns you want, what's the exposure, like what's the bank opportunities that exist out there, that's going to lead you to the best opportunities, right? And so ideally today, if you were to look at opportunities, you say, okay, what's going to be important to some people? Well, it could be, we did a 44 unit here in town, and we were able to get a 15-year term fixed interest rate with a no prepay after a year with the seller at 6%. Right. And so you're like, okay, fantastic. Right. But he didn't want to sell. He didn't want the tax hit. He's 60. He's got two daughters. Right. Those two daughters, he wants them to get a fixed payment. And then, 15-year term, if we hold that long, then they can figure out what they want to do. Right. With that, if they want to hold on to it. However, it also gives me a win because I get much cheaper. Right. I'm prime minus, almost a 175. Right. At that time we closed, and it allowed me to get into a project, which was a nice project. Right. Great property here. And then I didn't have to go fight the bank with the terms that the bank's presenting now. On the other side of it, just because the rates are rates does not mean every bank is the same bank, right? So certain banks are going to have different terms. You're going to see the Fannie and Freddie products. They need to lend money, right? So they're offering different amortization periods and different other opportunities, but you have to understand what's my business plan. If you want to hold for 10 years and not do anything, like Fannie and Freddie might be a great opportunity because you're not so stuck in the prepayment penalty. But if you're thinking that rates are going to go down or fluctuate big in reverse in the next 24 36 months, you may not want to have a Fannie product. Maybe you want to get with a bank, because the bank, although it will give you a 5-year term or a 7-year term, you have very little, 1% or no prepayment penalty, so you can be reactive to the market in that place. So there's always opportunities. You just have to understand, what is it that I want and what can be some of the tools that I can use to get there. Most of the time we say, well, I have this one bank and they'll do deals for me, but they might, it's like, oh, I need a screwdriver and I have a hammer, right? It's the same thing with loans. Like, you want to understand what is exposed and open to the market here, and what is my availability to use what's exposed to me in the market to our advantage to give us the best opportunity to have the best deal in front of us.
Yeah, I was recently on a mastermind call and talking deeply about this with some economists and seeing what they're seeing and some other wealth managers, and we were just talking about the SVB crisis and these banks failing and all of this. And one interesting point that the guy who was presenting was a family office manager, and he has been for 30 years. Um, he said that every time there is a Fed tightening, and Fed tightening is when the rates go up. Yes, every time there's a Fed tightening, and the businesses or banks or larger institutions that fail during that tightening are always tied to the previous boom cycle in whatever industry that was. And you think about that and you're like, oh, well, what's been blowing up in the last 10 years? Big tech. What banks are failing? Big tech. So these, this guy is just looking at it from cycle and cycle and cycle, and he's lived through it, analyzed it all, and he said the next thing that's going to happen is more of these industries who are in highly leveraged positions are going to fail, And as they do, people will start losing jobs, all of that stuff. We'll get into a more traditional recessionary period. And, from there, like you said, the thing that's propping up the housing market is just a massive need for housing. Like that's not going anywhere. So it's not, I don't expect it to be like a 30-40% like, dip in housing like it was in 2008, 2009, because that was a whole different problem. That was a
Yes.
regulation problem, right? But people are still going to start losing their jobs. So what's that going to mean? It means the interest rates are still high. They're not coming down anytime soon. First time home buyers still aren't going to be able to get into the market. So what are they going to do? Well, they're going to have to rent. So
Correct.
that's going to prop up rental prices even more. People will start, tightening the weights, their wallets and everything, and spend less on discretionary stuff. And the Fed is going to start spending more on internal United States manufacturing, not external stuff. So the manufacturing, this guy was talking about, he's like, hey, the manufacturing sector is going to begin to blow up. Defense, everyone knows listening to this podcast, every time that there's a recession, recruiting
Yep.
goes through the roof. Every service, all the time, because people need jobs. And being
Yeah.
in the military is a stable paycheck. I mean, it just is. So defense spending is going to go up. Manufacturing is going to go up. Cars and automotives and stuff is going to go up. The massive infrastructure surrounding the electric car movement in the United States that was in the what was that stupid bill called, Jason? The
Oh, the
anti-inflation,
green.
no, the Inflationary Reduction Act.
Oh, yeah,
Bullshit.
yeah, yeah.
What a stupid name. Anyway, but part of that was building out electric car infrastructure, right, all across the country. I mean, that's a huge, massive project, which is great and it's necessary. But that means that there's going to be more spending in automotive, more spending internal on what's going on in the U.S. So how does that trickle down to housing? That's what everyone is
Mhm.
trying to see. And I do think there's going to be an impact in the single family market. In the commercial market, I think there's going to be an impact, but it's going to be based on the people who, just like these big banks, are very over leveraged, and they're going to be forced in a position to either fail or exit their deals. And
Yeah.
that's where people can begin scooping up some deals. And then, of course, for the folks like you were just talking about, Jason, the people that are 60 years old, they need to sell. Listen, they need to sell, and the market is what the market is. And that's where you're going to be able to come in and work some really cool, creative seller financing opportunities that speak more to what you need, and honestly what they need. They don't want to take the tax hit. They want the recurring cash flow. I mean, that's a
Mhm.
great opportunity. So I've been telling people in my circle who listen to this podcast, in my person, Kevin's opinion, I think it's going to be, I started selling off some of my assets. I'm very liquid right now, and I'm looking to pounce on some mid-sized commercial multifamily real estate stuff,
Yeah.
40 to
Great
60
place to be.
dealers. Yeah,
I think that's a
100%.
great spot to be too, because the exposure rate and where the larger properties are, although they may be more reflective to the lower cap rates. Like if you were, a year ago, maybe you're at a 3.5, 3.5 on a cap, and maybe it's 4.25. That's a big delta on a 100 or 200 unit or a $200 million asset, right? But in those
Sure.
smaller properties, that's where you're going to have more pain, just more direct to a seller, right? More approachability and more to an open conversation of how you can make these deals work. Because where you get faced, even if you can get into that $200 million asset, you're going to have the adverse effect where you're not going to be able to get the same loan product that maybe they had before. So that deal is going to continue to be tough to pencil out for a moment, as long as you can just hang on and be patient. But those small opportunities, I mean, it's fantastic, and that same side, single family market, it's the push to rent is going to continue, just because a year ago, you're trying to buy a house, you're one of 30 people out there trying to get that house. You can do a $1,500 mortgage payment a month, get you a $350,000 house or whatever it gets you. Today, that same payment is now, $2,500, that it's getting you that much less. So you have a $1,500 mortgage payment today. Maybe you're getting a house that's $260. Well, there's no houses out there, right? With this difference in where pricing was to where pricing is not dropped, 75 or 30, 40%. So those people are still priced out of the market today. So they're going to say, well, I'm going to rent and stay longer. And they're not going to move as much because they don't want the, $4,000, $3,000 it costs to move. They'd rather stay put because they're hoping they can get back into the housing market shortly and get to a house, right? So it's going to push to have people in good, affordable places to live. They're going to stay longer, be active there longer, which will hopefully continue to empower forward the rental community. But it's going to be market for market. It's going to be, like you said, where the jobs are, right? So if the jobs are eliminated in a market because a market's heavily saturated in one kind of employer, and that employer has to really lay off a lot of people, they're going to be more exposed than if you're in certain markets where you have just a plethora of different non-connected industries.
Yep.
That if you have one hit and it takes you lose 3 or 4 or 5%, it's not this big hit because the market is saturated with a number of different employment types.
Yeah, yeah, and that's always when you're looking at the market, you want that diverse economic swath of industry to
Yeah.
to figure out. So for folks who have been listening to this and they're looking at markets, I would be looking at places where they do a lot of manufacturing. I think those places are going to grow over the next 5 to 10 years. I would be looking at places where there's automotive. I would not be looking at places where there's big tech or it's very big tech focused. And, for a lot of reasons, places where it's big tech, it's not really great markets anyway because the prices are astronomical because those people make a lot of money. But I digress. It's super interesting to see and go through an upcycle like we've been as investors, and then to go through the impending down cycle. I mean, I wasn't investing in 2009. I I was in college. I didn't know my ass from my elbow, uh, but I started investing in 2018, and I thought we were at a peak cycle then, and we continue to
Yeah.
ride the cycle, and that's great. But now I think we're going to start coming down. I think for folks who have single family real estate, there could be an opportunity to maybe work in a lease option where if you have a tenant and you want to keep that tenant, offer them a lease option and an option to buy after a while, and they say, hey, I can't qualify for this, but you can lock in a sales price now, and and listen, if they say, oh, I can't buy this at the end, that's okay. You locked in the lease. You got the rental income. So that could be an interesting tactic to employ if you're looking at a single family and you're worried about some sort of vacancy issue coming up.
Yeah. That's
Uh,
actually great. That's actually great. And being creative, right? So
being creative, yeah.
you have to make sure. And when you are creative, the big thing is that sometimes I see investors when they're starting out, they're like, I want seller financing. They'll go with these very complicated deals. And remember, not everybody's thinking our way our mind is. So sometimes, if it's a elderly couple that's 80 years old and you're presenting this very intricate deal that's great for them, sometimes it's so complicated they'll just say no. So making sure you can understand why it can benefit them, but also give them the information in a way that they can digest it, right? So whether that tenants, right, because it allows both of us to win, but them to feel like, to know they won and not feel like you're trying to do some complicated algorithm to get over on them.
Yeah, exactly. Because
Yeah.
like you said, a confused mind says no 100% of the time. So you got to keep it simple, and you have to make sure that the people you're presenting to understand. And the best way to do that is actually getting to know these folks and what
Yeah.
it is that they want, because people sell for a million different reasons. A million different reasons. I'm currently reading. I don't know if you've read it, Die with Zero.
Oh yes. Good book.
Yeah, yeah,
Yeah.
I love that book, and it
Yeah.
really kind of reshapes how you think about the fact that most people don't actually create the life experiences that they want with the money that they have when they want to do it. So like if you want to go hang gliding and that's really what you want to do, but you're a saver and then you retire when you're 65 and you're like, oh man, I want to go hang gliding. Oh crap, I'm 65
Yeah.
years old. Like that ain't
100.
happening
Yep.
anymore. Like
Yeah.
live your life. So point is, people sell for a million different reasons, and getting to know them and their hobbies and what they want to do and structure a deal around that allows them to live their life. It's a great way. It's a great way to find deals and be creative, especially in today's market. Oh boy, Jason, this is a lot of fun. I love nerding out on this stuff.
I love it.
All right, man. We're coming to the end. I got to bring you into the bonus round. It's the same 4 questions we ask each and every guest. Are you ready, my friend?
Sure. Let's do it.
All right. Question number 1: what book or software has really been crushing it for you lately?
So good part. I've been reading this, How to Think Like a Roman Empire book. It's like a Stoic book. It just has some good parts. Is that I think we were talking about the reactivity question before, right? Many times it's that our reactions are just based on our feelings, but it's actually not a true result of what the action should be, right? The action should be to literally let ourselves be calm, be focused on where we want to go. And most of the time, and lots of times, we don't even need to have an action or reaction. It just is. right? I don't need, and that's like if you were, and I don't want to prolong the section, but like watching the news, right? The news is something to make us react, right? If you just don't watch the
Oh, don't get me
news,
started on that.
yeah, what's
We'll
gonna
prolong this for another 2 hours
correct?
talking
But
about that.
like if you shut off the news, my mom was like, "I wish the news would stop scaring me." I was like, "Well, shut the news off." There you go. You're not scared anymore. So simple solution, right? But that's simply put, right? Most of the time, there's information on there has no value to me in my day. It's not going to help me help other people or do anything that's going to be beneficial to me at the moment.
Yeah, it was God. I forget what it was called, but it came out a couple years ago. That whole scandal with like Roger Ailes and how he was mistreating people in the Fox News Corporation and all that stuff. That which was terrible. But there was like a documentary that came out and it went into the psychology of the 24-hour news cycle, and it's
Mm.
literally their business model to scare the living shit out of us.
Oh yeah.
That is literally their business
Hmm.
model because that's how you get eyeballs.
Yeah.
And
Ad revenue,
and
right?
eyeballs lead to ad
Yeah.
revenue. Exactly. So it's
Correct.
like when you realize that and you're like, oh man, I'm just a pawn in this game, then it's like,
Correct.
I'm not saying you don't have to trust your news sources. I mean, you can find trustworthy news sources, but just be picky
Yeah.
and just know that like everything that's being put in front of your face, there's money behind it. So
Yeah,
just
and if you have a thought of like, oh, I don't know if that's true, like think of it like if it was about good stories, which is really why we'd want to listen, it would be like, oh, Johnny, got good grades today, and he went and created this project at his school, and it's been able to help the community. Or Debbie saved a cat in the tree, right? That would have been like half the news, for which we see none of it.
yeah, exactly. Anyway, we digress.
Yeah.
Question number two: who's your biggest hero and why?
Oh man, that's another great question. I'm gonna say my wife. I mean, she continues to just just astonish me. I mean, she's able to deal with me. That's probably not step number one, right? But in the same front, she's just been a magical piece to everything that happens in my life.
Yeah, that's awesome. Question number three: what do you like to do for fun?
I run.
Oh,
I run. I work out every morning, and I run. So I'm going to do another ultra April 15th somewhere in
hold on,
Missouri.
wait. What is an ultra? What does that mean?
Usually anything over like 26 miles. So I'm going to do a
Yeah.
100-mile race and
Ah.
April 15th there. So,
Well,
but
you're on
that's
like Brian Murray's level, bro. You run with him?
actually, we do not run together. So when he was first doing one, I was like, I had done a bunch before. I was like, yeah, you just got to keep the path, right? It's part of that. It's been my ability to remain disciplined is based on me and just how I set the parameters each day, right? I'll get up and have a very dialed in process, but I will work out like just no matter what's in front of me, I will do that, right? Because that is just something that there's always a reason not to on most things in life. But in that fact, if you want wealth, well, you also should want health because you can have one without the other, right? But in that fact, if you want to enjoy the wealth, you really need your health.
Yeah, yeah. There's pillars, man. Pillars to wealth, and it's not just financial. It's physical.
Correct.
It is physical. It is emotional. It is spiritual. All of those things being dialed in, they lead to true happiness in life. And I think if
Hmm.
you're only focused on the financial and you're letting those other three go, you may be making money, but you're not living a fulfilled life. And then what's the
Yeah.
point? Like what? Seriously, what is the point? Awesome, dude. God, ultra marathons. My wife's a big runner, and I did
Nice.
a 5K with her, and I'll share a quick story. I did a did a 5K with her, and we started out running together, and that lasted about a minute. And she's recovering from an injury, so she was doing like run walks. And I finally caught up to her during one of her walk things, and I kept running, I kept running, and then like 2 minutes later, she was past me because she was running again. Long story short, she finished a minute and a half or 2 minutes ahead of me doing a run walk when I was running the entire time.
There you go.
And I was just like, well, that's humbling.
That's it. That's
uh,
awesome.
yeah, she's awesome. All right. Question number four for you. You shared so many nuggets so far, but I'm going to ask you for three more, maybe summarizing what we've talked about, what you've shared thus far. And this could be maybe for the military real estate investor who's listening to this podcast right now, who's like, man, I really want to get my spouse on board. How do you and Pili do it and all of that? Or maybe it's just the person who's taking a good hard look at the economy and where the next opportunity is going to be. Like, how can they prepare themselves to to thrive in this impending down cycle that we're looking at right now.
Yeah. Well, action is always going to produce more results than inaction. And so many times we sit in the sideline waiting for that perfect moment, but it's never going to come. So you really have to be disciplined to approach that. I need to take action today because at least if I take one step, that one step is going to teach me something, right? It's either going to teach me on the wrong route or it's going to teach me something I didn't know about the route I'm on, but it's going to get me further to where I want to be in one way or not. It's going to tell me not to go one way or it's going to tell me to go another way. And most of us, we as people think that if we take that first step, it's off a 10-story building and usually it's just off a curb, right? And just step off the curb, get out there and do something. You're listening to this podcast today. We talked about a lot of things. Pick one thing, go do it, and see the result. Maybe it's a horrible result. Fantastic. Now you know not to do that anymore. Go do something else. You know what I mean? Like, and that's simply how you go. Exactly.
Okay,
right. That's it. Don't do that. Right. And the reaction is that, but most of it's going to happen is that the result's not anywhere as close to bad because we thinking it either is going to be if we do something, the worst of the worst of the worst of the worst is going to happen. Like the biggest, like the 1/10 of 1% chance is going to happen. But okay, sure, you want to give credence to that. Then let's say on the other side, if you do it, then the 1/10 of 1/10 of 1/10 of the best thing in the world can happen too. Sure. And what's going to happen is neither of those things. It's going to be somewhere in between, usually on the positive side. Yeah. Right. So, and with that, when you start, understand it's not going to be perfect. I mean, nothing should be perfect because then we wouldn't appreciate it. So if you start acting today, it's not the perfect road. Great. You'll find it by taking action. And our goals are just a part of the journey where buying your first 100-unit property, fantastic. The second you do that, it's not like life stops. Like, oh, okay, did it, right? It's just, you're going to be so much further past that by the time you get there because it was just really a mile marker along your journey. The journey is the action. The action is you doing. The inaction is something that serves the moment, but never serves the bigger overall picture.
Yeah, man, you're so dialed in. I freaking love it. I love that. And I you gotta have, folks out there who are in the military and they're equally dialed in at work, and we're trained to be dialed in like this all the time. Yeah. Imagine what it's like to be this dialed in on a real estate project. It's so incredible, and it can grow your wealth and your net worth and your freedom so much faster.
And for that group, like just the simplest thing, if you can do it one place, you can do it another place. It's a transfer of energy, right? Yeah. So I wish I had that growing, that I had some format, right? Because I already have the basis. It's learn tactics is now just making sure that the learn tactics are in the right channel or right lane.
Yeah. And I know you're a proponent of masterminds. I am as well. Guys, remember, you don't have to do this all alone. Yeah. You can go, and whether you go and get into the Military Multifamily Academy, or you go and get into any other mastermind or course, I don't care. Do something. But that's a great action step to get you the exposure, motivation, confidence, and give you literally the path that you need to take to get this done. Because if you have no clue what the heck you're doing and you want to take action, it can be super intimidating. The onus to do all the research is on you. But if you can follow in someone's footsteps who's done it before and is literally laying out the path of, you need to do steps 1, 2, 3, 4, 5, 6, 7 through 10, and you need to do them on this timeline, then it becomes so much clearer and easier and less intimidating. And that's why I encourage to invest in yourself. I know, 1,000%. Jason, you've invested in yourself. I invest thousands and thousands, tens of thousands of dollars a year in myself, just to sharpen the saw and make sure that we're prepared for anything that comes up, and also for growing and learning and living a more fulfilled life. Jason, this has been super awesome, man. For folks who want to get in touch with you and Pili, how can they do that?
Sure, Kevin, thank you. So Yarusi Holdings, YARUSI, basically my last name, holdings.com. Everything about us, our company, if you want to talk about what you're doing out there in real estate, you want to learn more about our investments and just see the opportunities that we have here as a company, feel free to reach out. I'd love to talk to you. Thank you.
Yeah, I love that. So we're going to have that website linked in the show notes. All you got to do is scroll down, tap the link. Also, some books that Jason mentioned, some books that I mentioned, they're going to be linked there. Just tap the link, get the book, get the audiobook. I don't care. Just educate yourself and do one thing. Please, if you got any value out of this podcast, go and share it. go and share it with someone and say, yo, I just listened to Jason drop some serious knowledge bombs on the economy, on how to get your spouse on board in real estate investing, and like some deep shit on, I don't even know, we were talking about so much cool stuff. But like, you can go and share that with someone in your squad. And that's what this is all about. That helps our podcast grow and reach more people and make more of a positive impact on the military real estate investor. Thank you so much, Jason, and we'll
Thank
definitely
you.
have you on again.
Sounds awesome.
All right, see ya.